As you can see, America has a relatively high interest rate. This will lead to capital outflow from Australia to America as rational investors will wish to maximise their profits. This will therefore cause investors in Australia to sell their Australian dollars, increasing the supply of the Australian dollar in the FX market. Investors looking at Australia for investment will likely turn towards the US dollar and therefore decrease the demand from the Australian dollar on the FX market. We expect this to cause a depreciation of the AUD against the USD. In this diagram, it shows the supply curve shifting left and the demand curve shifting left. This causes an overall depreciation of the Australian dollar against the US dollar. As you can see, the American inflation rate of 2.2% is relatively higher than the Australian inflation rate of 1.9%. As the USA's inflation rate is relatively higher, this means that American goods and services that are being imported into Australia are becoming relatively more expensive, and therefore because of this, the demand for the goods and services will decline. As a consequence of this, there will be reduced demand for the US dollar on the FX market, as this is the equivalent to a reduction in the supply of Australian dollar on the FX market. We expect this to cause an appreciation of the Australian dollar against the US dollar. This graph demonstrates that the supply curve will shift left and the demand curve will shift right, and this will lead to an overall appreciation of the Australian dollar against the US dollar. As you can see from this information, the growth rate of America at 2.9% is substantially higher than Australia at 0.4%. As the American growth rate is higher, this would mean America's demand for imports will increase. Included in that increase of imports would be Australian goods and services. This will in turn increase the demand for the Australian dollar, as it is needed to purchase Australia's exports. We expect this to cause an appreciation of the Australian dollar against the US dollar. In this graph, we can see a shift of demand to the right, causing an appreciation of the Australian dollar against the US dollar. From this information, we can see that the Australian interest rate has remained unchanged at 1.5% and will remain constant for the following quarter, according to the Reserve Bank of Australia, the RBA. In relation to this, the British pound also remains unchanged at 0.5% according to the Bank of England. As Australia has a relatively high interest rate to the British pound, this will increase the demand for the Australian dollar, as Australia will encourage capital inflow. Moreover, the supply for the Australian dollar will decrease, as Australia will discourage capital outflow. However, in saying this, individuals and businesses wishing to invest will most likely choose the AUD, as this will provide them with greater profits on their investment than the pound. Therefore, it will ultimately lead to increased capital inflow, which will outweigh capital outflow, and thus appreciate the dollar against the pound. Referring to Trading Economics Global Macro Model and analyst expectations, the UK interest rate could rise to 0.75% in the next quarter, but will barely affect the investment strategies by investors. The visual representation of this information shows us that the demand curve shifts to the right and the supply curve shifts to the left. So overall, we see that the exchange rate in terms of the dollar is appreciating against the pound. As the UK is experiencing relatively higher inflation than Australia, as their inflation rate is at 2.7 compared to Australia's 1.9%. This makes UK's exports less price competitive relatively to Australia, and therefore result in Australia's demand to decrease for UK's goods and services. Consequently, since there is a reduction in demand for the pound in Australia, this reflects a decrease in supply for the dollar on the FX market. From the effect of inflation, it would appreciate the dollar against the pound due to more capital inflow from goods and services. Will Martin's comment implies that this results in a higher market confidence, which in turn is higher spending and such demand for their goods and services. As demand increases, this puts pressure on businesses to produce, and therefore will control what people buy by raising prices, and thus why inflation rate is relatively higher in the UK compared to that of Australia. As displayed in this demand and supply diagram, it shows that both supply and demand shift to the left. As there is a shortage of Australian dollar funds on the FX market, the price value would appreciate against the pound value. As we can see, both countries' GDP growth rates are declining from the previous fiscal year and furthermore decreasing again during the next fiscal year. This can mean that individuals and businesses' confidence are reducing and thus leading to lower prices because of less demand for goods and services. Relatively, Australia's growth rate is higher than the UK's, which will lead to an increase in the supply of the Australian dollar on the money market as people want to buy more UK goods and services with the pound as prices are lower. Also, reduced demand for Australian dollars will be a product of lower growth rates. This ultimately leading to a lower price value of the Australian dollar, in other words, depreciation on the pound. So in this graph shown, we can see that the demand curve is shifting to the left and the supply curve is shifting to the right. So therefore, there will be more Australian dollars on the FX market, which in turn will lead to an excess of funds which would depreciate the dollar against the pound. So to summarise the Australian dollar against the Great British pound, the economic indicators that were used were the GDP growth rates, the interest rates, and the inflation rates. Based on these, we can conclusively see that two of the three indicators, which are interest rate and inflation rate, go in favour of appreciating the dollar against the pound. Therefore, over the next fiscal quarter, we expect to see the dollar appreciating against the pound based on the information that we have gone through.